Today I wanted to go through Google's recent earnings as one of my newer holdings that I've invested more into, and then I wanted to go through Snap's recent rise and even Chipotle's beat as well. It's been a good earnings season for most people, and first that we'll go through is Alphabet. Alphabet soars with most since 2015 on strong earnings, first dividend, and a $70 billion buyback. Alphabet shares shot up on Friday after the company posted better than expected first quarter results and approved its first ever dividend. The company on Thursday reported revenue of $80 billion, up 15% increase from the year earlier and the fastest growth rate since early 2022, and an earnings of $1.89 per share. Alphabet exceeded analyst expectations for revenue on YouTube and Google Cloud. Alphabet shares shot up 10% on Friday after the company posted better than expected first quarter results and greenlit its first ever dividend and a $70 billion buyback. It's the sharpest rally for the stock since a 16% jump on July 2015. The shares closed the day at $171.95, valuing Alphabet over $2.1 trillion. The company on Thursday reported a revenue of $80.54 billion, a 15% increase from a year earlier, and the fastest growth rate since early 2022, surpassing the $78.59 billion in sales expected by analysts. Alphabet announced that its board also authorized a dividend of 20 cents per share to be paid on June 17th to all shareholders of record of June the 10th, and said it intends to pay future quarterly cash dividends. The company said the board also approved a repurchase of an additional $70 billion buyback in stock. Also importantly, the company exceeded analyst expectations for its YouTube advertising revenue and cloud Google revenue. This has been nothing but good news for Google investors, and myself as someone who's recently added to my position is nothing but happy with how the stock has been trading. The stock has shot up over 10% today, and in the last week it was trading pretty flat prior to the earnings. Overall, if you've been a Google investor for a while and you even take a 3-year look, during 2022, the stock had a horrible time trading down like most of the market. But if you take a 1-year look, the stock is up over 64%. Google has never released a dividend, like it said, and this is going to draw even more investors to the stock. The buyback plan will also mean the existing shares that you own will be worth more hopefully in the future, and it seems like the company is doing everything in the right direction. Obviously, lots of people were worried about the stock and the company with AI potentially affecting Google's search monopoly. But the company seems to be full of sharps, and it seems to be taking the right direction in terms of protecting its stock and its value for its shareholders. Currently, my position is only around $1,700 in equity, which is just under 10 shares. I'm up around 25% and was even down at points, but decided to sell out of my JP Morgan position or portion of it and add to my Google position. Overall, that's been a good decision for me, and I'm now up around $350 on the share. Although this last earnings was good, this hasn't changed any of my outlooks on Google or how I think the company will trade going forward. Obviously, it's good to hear strong news, and it's nice to see your stock position go up, but even if it hadn't, I'd still potentially be looking at adding to my position in the future. One of the reasons I added to my Google position was it was actually one of the lowest PE ratios out of the Magnificent Seven, and I was looking for someone to invest other than my main big positions already. I had previously held more in my Google position, but I had sold out a while ago. Adding back in means that going forward I'll hopefully be able to gain this little dividend. Even though I don't focus on dividends in this portfolio, there's nothing wrong with getting a bit of extra cash and reinvesting it back into the stock. My average share price is around $136, and any future plans of buying in I'll document on this channel and keep you guys updated. The second company I wanted to go through is another one that I've stayed away from, but it has been in the news a lot, and that is Snapchat. Snap shares rocketed 28% after the company reports unexpected profit and better than expected revenue. Snap had its best day on the market since 2022. The stock rallied better than expected first quarter results on last Thursday, and the CFO said, "I think more broadly, we saw a much more robust brand environment." As stated, Snap shares surged 28% on Friday after the company surprised Wall Street by showing a profit and reporting sales and user numbers that exceeded analyst expectations. The stock climbed $3.15 to close at $14.55, its biggest percentage gain since 2022, even after the rally, but the stock is still down 14% for the year due to a 31% plunge in February. Revenue for the first quarter increased 21% to $1.19 billion from the $989 million a year earlier, topping analyst expectations. The company reported adjusted earnings per share of 3 cents, while analysts were expecting a 5-cent loss. Snap said adjusted EBITDA exceeded our expectations and was primarily driven by operating expenses discipline as well as accelerating revenue growth. Snap has been working to rebuild its advertising business after the digital ad market stumbled in 2022. Its investments are starting to pay off. The company said in its investor letter that revenue's growth was primarily driven by improvements in the advertising platform as well as demand for its direct response advertising solutions. I think more broadly, we saw a much more robust brand environment, which played out in all of our regions in Q1, CFO Derek Anderson said on the earnings call. User growth was also better than expected. Snap reported 422 million daily active users in the first quarter, up 10% year over year, topping the average analyst estimates of 420 million. In February, Snap announced it would lay off 10% of its global workforce, or about 500 employees. The company said Thursday that headcount and personal costs will grow modestly throughout the rest of the year. Advertising revenue came in at $1.11 billion in the first quarter. Snap's other revenue categories, which primarily driven by Snap Plus subscribers, reached $87 million, an increase of 194% year over year. Snap reported more than 9 million Snapchat Plus subscribers for its first period. Though Snap's growth was fastest since March 2022, it still fell behind that of Meta, which reported 27% growth in its better-than-expected first quarter results on Wednesday. Even though Meta shares plunged after the company issued a light forecast and spooked investors with its long-term investments. Overall, this is a company that I've stayed away from, and I really haven't spoke about much on this channel. Snapchat has had a recent downturn over the course of the year, but it's also vulnerable to lots of ups and downs. Overall, in the last 3 months, it's still down 11%. If you have any idea of kind of how this company's run, just from my brief understanding, I believe the founders and the owners have super voting shares, and they pretty much have a monopoly over any decisions that get made at the company. Obviously, if you take a bit of a long-term approach, it's lost 76% of its value in the last 3 years, and the recent surge up looks tiny in regards with the entire outlook over the past few years. But if you believe in Snapchat, or you believe there is a green hope, obviously it's down a lot, and potentially people could look at investing into it. But it is a company I don't think I'll be putting my money into, as I don't think long term it's the best investment when I compare it to other companies I already hold in my portfolio. But if you believe you can find value, then more choice to you. The last company I wanted to go through is a bit of a different one. It's not necessarily the same tech giants, but it is a staple, and that is Chipotle. Chipotle posted big earnings beat as diners shake off higher prices. Chipotle Mexican Grill topped Wall Street's expectations for its quarterly earnings, revenue, and same-store sales growth. The burrito chain said traffic increased 5.4% in the first quarter, and in March, Chipotle's board approved a 50-for-1 stock split, one of the largest in the New York Stock Exchange's history. Chipotle Mexican Grill on Wednesday reported quarterly earnings of revenues that beat analyst expectations, fueled by higher traffic to its restaurants. The stock rose 4% in extended trading, and here's what the company's report compared to the Wall Street expectations. The earnings per share of 13.37 adjusted versus the 11.68 expected, and revenue of $2.7 billion versus the $2.68 billion expected. Chipotle reported first quarter net income of $359.3 million, or $13.01 per share, up from the $291.6 million, or the $10.50 per share a year earlier. Excluding a 36-cent hit from increase for its legal reserves, the burrito chain earned $13.37 per share. Net sales also climbed 14.1% to $2.7 billion, and the company's same-store sales topped 7%. Overall, this looks like a great result for Chipotle investors, and with that stock split coming, I think it's going to drive even more investors to take a look at the stock. Even though the stock will be splitting and will still be worth the same, it's currently sitting at $3,186 a share, which for some people can make it seem like it is extremely expensive. Splitting the stock price will make it more available for people who are looking to buy whole shares or looking to potentially invest in Chipotle. Overall, it's been a strong year for Chipotle investors, and in the last 3 months the stock is up 36%. Even in the last year, the stock is up 58%, and if you look at the course of the last 3 years, it's up 116, beating out a lot of tech giants in terms of returns. If you've been a Chipotle investor, you've done extremely well. Overall, when I look at Chipotle, I look at it similarly to how I look at my Costco position. A staple that's not necessarily a growth company when people look at it, but it's beat out in terms of results many of the other tech giants that you would think of. This is a stock that I've looked at previously, but I'd have to do a greater deep dive to see if it's worth me justifying buying into Chipotle, especially after the great run-up that it's had over the recent years. Overall, it looks like it's doing a great job in terms of leadership and how it's going forward. It's beat out on its results, and hopefully I'll keep tracking this stock and see how it trades in the upcoming future and whether it's something I would like to hold in my portfolio, maybe if the price was to change a little bit. Those were the 3 main ones that I wanted to go through today. And when I have a look at my holdings, I do have other stocks that have expected earnings coming up soon, such as the likes of Amazon, and I will do more videos tracking on how they go. But the stock portfolio has bounced back a little bit from being up 22% to now up nearly 24.5%, and is up 1.47 in the last day, or around $355 in just my stake positions. This isn't too bad in terms of hopefully bouncing back, but I have been investing a little bit extra into buying the dip. In regards to my Vanguard portfolio, nothing's really changed. The positions are still sitting at 50-50 each, and I did get my recent dividend, but I won't get another one for another 3 months. So I'll keep tracking if I decide to invest more. And like I said, the stock portfolio is currently sit at a combined value of just under 63,000, and this is well on the way of making it to 70,000 before I take a little break and go away. So that's kind of my goal, and obviously the goal before the end of the year is maybe to get it to 80,000 or even 85,000, and I'll keep tracking these videos to see how my progress goes towards hitting those marks. On my Excel sheet, you can see a better kind of description of how everything looks, kind of a bit more visual. And you can see my Australian portfolio sitting at 50-50 between my 2 stocks. I've slowly been growing my international shares position, and it's kind of hit that mark now of 50-50, which is nice. And in my American portfolio, you can see my major players are obviously VOO, which tracks the S&P 500, and then Microsoft and Apple. I've added recently to my Microsoft position and VOO, so those 2 are becoming a little bit big, but I will hopefully diversify and be investing a little bit more into Vanguard to get it to 50%, as it currently sits at 48. Having a quick look, you can see the gains in terms of how my portfolio has grown, both of them, over the recent year and even a bit further back. And my plan is to keep tracking these and keep kind of trading up in this upward trajectory of me investing money. So even if the stock market goes down, with my slow investments, I can kind of dollar cost average into positions I believe in and grow them. So for one day, I can build wealth in these portfolios and track them and keep doing these videos to hold myself accountable. That was all for today. I just wanted to go through what was happening at Google, especially as it's one of my holdings, and just wanted to see even what you guys' thoughts were. So feel free to leave that in the comments, and my next video will probably be an update on the next set of earnings. Cheers.